Okay, I will show you this two question, 04 paper 2 question 4 and 05 paper 2 question. And then after that you got to do all these four questions on your own. Okay, so now 2004 paper 2 question 4. Now you look at this question. Glenda is a specialist accountant. She is suffering from stress and been advised by her doctor to reduce her workload. Okay, this is okay, now I want to see what the question is asking. Calculate the profit arising from each of the four options above. Okay, each of the four options above. Calculate the number of hours Glenda will need to work, either fee earning or supervising, for each of the four options above. So that means I would have to think of a way, a systematic way, how to organize this question. Some of the students may have other ways of answering these questions. It's okay. Like for example, you put option one, all this, then after that another down there you go and redo again option two. It's okay, but you could be wasting quite a bit of your time. But nevertheless, it's still correct, right? So how I want to think of a way of how I want to answer the question in a more organized way is, okay, they said calculate profit arising. Then after that you have this one. If Glenda wished to make a profit of 120,000 a year, how much time she herself need to spend on fee earning, assuming she make no other changes or existing arrangement? So don't be afraid of answering this question. Just answer in your own way and get the answer. Some student could have do the question in a more long-winded way. Nevertheless, it's still correct, right? So for me, I want to think of a way, because I have practiced answering these questions a lot. So I also have the ability to think how to organize my work in a more systematic way. So option 1, 2, 3, 4. Then B also is so-called, I need to so-called calculate. So I even put B here. So this one, option 1, 2, 3, 4, this is for A, and then this is my answer for B, so I just put it here. So I am so-called saving my time a lot. Okay, so now then I slowly go into the question. Okay, her income is closely related to her own reputation and hours she spent working for clients. She employed two assistants A and B, and during recent year her annual profit have averaged 180,000 as calculated. This one, like this. Okay, so Glenda, okay, this one is 800 chargeable hours at $300 each, and these are her two assistants, the chargeable hour. Okay, you see, if you are doing trading, if you are in a supermarket business, you buy goods and you sell. That's your business. Okay, so now you are an accounting firm or law firm or this kind of firms, you see. You are not selling goods, okay? But you are selling your service. So probably if you are in a law firm, the client will come to you with a complicated court case or something, and then ask you to. So on what basis are you going to charge your client? Based on what? Are you going to charge your client? So for accounting firm, for law firm, all these firms which are which are not selling goods, normally we will charge our client based on our hours spent. And then the more senior the staff is, the charge out rate, this is called the hourly rate, will be higher, and then A and B also. So let's say you go to a hospital, for example, you need an operation, they will give you an estimate of the fee. How did they, okay, so that means accounting firm, law firm, hospital, how do they estimate the fee in order to give a quotation? You cannot tell the client that, oh, your fee, we don't know, we see how lah, later we finish that work, then we bill you. The client must know how much is the fee before they decide to engage you, correct? Uh, so so how much is the quotation you give to the client? You will estimate the hours needed by various staff. Then you Then you total it up. Then after that, you give, okay, sir, in order to do this work for you, this is the fees is 5,000. Okay, so that is how you estimate. I mean you give price to your client for your service. Okay, so this is what this chargeable hours is about. And then these are the expenses: fixed costs and secretarial costs, direct costs at 15% of revenue. Okay, 104 at 15%. This is the direct cost. So I have explained to you what is direct cost. Costs that are so in this case, you see direct cost 15% of revenue. That means this direct cost is so-called costs that are variable, okay, that will increase in direct proportion with revenue. So when the revenue increase, the direct cost increase at a rate of 15%. Okay. Then you have salary A and B. Okay, Glenda spent 300 hours a year supervising A's work and 500 um, supervising B's work. So Glenda would have. So that means Glenda will. This is the chargeable hours. That means this is the hours that she work for doing the client's work, and that will be that hours would have been charged to the client. Okay, then she also spent this number of hours to supervise her staff, and these are non-chargeable hours, correct? These are internal work, internal company work that is not charged to the client. Okay, Glenda feels that to maintain good standard of living, she need an annual profit of 120,000. She consider implementing any one of the following. So then now, okay, option one, employ another assistant under the same condition as B. So employ another B, and reduce her own chargeable hours to 100 per hour. So when I do this calculation here, so Glenda's chargeable rate is $300 per hour. So under option A, her chargeable hour will be 100 hours per year. Okay, so 100 times 300, you get 330,000. And then A would be the same, no change, will be 260,000. B, okay, now she say employ another B. So that means the okay, so these are income because these are the hours that you charge your client and you collect the money from the client. Okay, so now she will have two Bs because she have now existing she have one assistant B. Now she's going to employ another assistant B. So the revenue generated by B will be 195 times 2. 195 times 2, that is 390,000. So you total up, you get 680,000. So expenses 15%. So you take 680,000 times 15%, that will be 102,000. So salary A will be 90,000, then salary B will be 75,000 times 2 will be 150,000. So fixed occupancy and salary cost is fixed, so 245,000. Okay, so this is my total expenses, and my profit will be 680 minus 587. It's so-called like kacang, right? It's easy, right? Okay. Option 2, make A redundant to save her own supervision time. So that means go and sack the A lah. So now what is the so sack the A, so but her own chargeable hour is still the same. Okay, B, the chargeables the income from B is still the same. Okay, so then this is the total income. Okay, direct cost will be 435 times 15%, 435 times 0.15, so this is 65,250. So A sack already, so no salary. Then B, the salary is 75,000 according to here, so this is the total expenses. So then this will be the profit. Then 3, option continue at present but reduce her own chargeable hour to 400 a year. So you take 400 times $300, that will be 120,000. So this one A, B same, okay. Then direct cost will be this one times 15%. Then the salary B same. This one fixed occupancy cost same. Okay, then total expenses is so much, then the income minus expenses will be the profit. 4. Make B redundant. Go and sack your B. Reduce her own chargeable hour to 400 a year. Okay, and secure a smaller, cheaper premises and secretarial cost of 140,000 a year. So this is fixed occupancy and secretarial cost. So they say B sack already no more. So this is A. So then this one reduce to 400 hours. So 400 times 300 is 120,000. So A is still the same. So this is the total income. Then times 15%, the direct cost will be 57,000. Then total expenses. So this is the profit for the year. Okay, so easy, right? This question actually is easier. Then here this, then here what the question asking. Okay. Um, okay, so then he said here, calculate the number of hours Glenda will need to work either fee earning or supervising for each of the 4 options. So number of hours Glenda need to work. So this is number 2. Okay. So number 2, the fee earning. So this is Glenda's hours, right? Fee earning is 100 hours. Then B is B, the fee earning is still 800. C, the fee earning is 400, and D, the part 4, option 4, the fee earning is supervising. So employ another assistant as B. So she says she spent 500 supervising B. So now she got 2 Bs will be 1,000, and then A will be 300. So for option 1, the supervising hours is 1,003. So total hours worked. Then option 2 is make A redundant to save supervision time. Okay, so make A redundant, so only have B. The supervising hours is 500. Okay, so that's why her supervising hours here is 500. Then option 3, continue as present but reduce her chargeable hours to 400. Okay, continue as present, her supervising hours will be 500 plus 300 is 800. Then this one, option 4. So this one make B redundant, so she sacked B already. So only have A. So supervising hours for A is 300. Okay. So then here says, advise Glenda on her best choice. So based on this, what is the best choice? Okay, this is for B. So I haven't do this first. So from option 1, 2, 3, 4, which is the best choice? Best choice, okay, the best choice will be option 4, as Glenda would need to work the least hours to achieve the highest profit. Yeah, so easy, right? Yeah. So B, if Glenda wished to make a profit of 120,000 a year, how much time she would need to spend on fee earning activities, assuming she make no other changes to existing arrangement. So this is part B. So the profit is 120,000 she needs to make. So then so now she wants to make 120,000, and okay, she make no changes to the existing arrangement. Okay, no changes. So this one I don't know yet, because I don't know how much time she would need to spend on fee earning. So this one I leave it blank first. But this one I know, because it's the same arrangement. So I just copy from here. So this is 455. So the direct cost based on 455 is 455,000 times 15% is so much. So salary A, salary B is so much. And then this is the fixed occupancy and salary cost is so much. So the total expenses is so much. So that means, you see, that this is the Glenda's income. And then the thing is, Glenda's income is will also carry a direct cost of 15% of revenue. So that means the so-called 85% contribution required by Glenda's chargeable hours will be 143250. So this is we have learned from the previous lesson, income minus the direct cost, the variable cost. Direct cost in this case is variable cost, is actually contribution. So the contribution required by the Glenda's is is in order to this one minus this one plus this one, you will get 120,000. So this 143250 is my balancing figure. So how I get 143250? I take 455,000 minus 478250 minus 478250. So that will be negative 23250. So negative 23250 plus what equals to 120,000. So that means negative 23250, I will bring it to the other side of the equation. So negative, so it will become 23250 plus 120,000 is 143250. The purpose is, this is blank. That means I want to take this one minus this one plus this one so that I get 120,000. So this is mathematics, right? Okay, so this is contribution required by Glenda. So this is 85%. And how much, if this is 85%, because this is 100%, right? I have to minus the 15% of Glenda's one, right? In order to get the 85%. So 100% minus 15%, 80. So this is 85%. So how much is 100%? 100% will be 143250. Okay, so 143250 times 100 divided by 85. So will be 168529 is the contribution. I mean is the so-called income required by Glenda. So then after that, in order to get the number of hours, you will divide by 300. Okay, so divide by 300. Then the number of hours, so you round it up, you get 562 hours. Okay, so you take 143250 divide by 0.85. So this one same as divide by 0.85 equals, then divide by 300. So you get 561.76. So the fee earning, so if you round it up, it's 562. So as in the calculation above, if Glenda wished to make a profit of 120,000 a year, she needs to spend 562 hours on the fee earning activities, assuming no other changes. Some students solve this by mathematics algebra or something like that, which is correct also. I said that there are many ways to answer a question. Okay, so this is one of the way that I suggest. Okay, then now we come to 2005 paper 2 question 2. Okay, so the question says Breakneck Taxi operates in 5 distinct zones in Singapore. The owners wish to eliminate any unprofitable areas of the business. Details of last year's operations are as follows. So okay, well, what the question wants. Calculate the contribution in each zone as a percentage of turnover, before any changes are introduced. So calculate the contribution in each zone. So what is contribution? Contribution is revenue. Revenue is same as turnover. Revenue minus variable cost, you get contribution. The question says calculate the contribution in each zone as a percentage of turnover. Okay, before any changes. Okay, here director have discussed the above figures and are considering 3 options. So before any of these changes. So now this is part A, and then this is only 5 marks. So zone A, B, C, D, E. I put it in 1,000 also lah. Okay, so turnover same, just copy the figure. Okay, so contribution is turnover minus variable cost. Okay, variable operating expenses. These are variable cost. Then you get contribution. So percentage of contribution to turnover. So this one divide by this times 100%. So that's how I get my percentage of contribution to turnover, right? Not difficult, right? Okay. Then now prepare financial statement to show the result of putting into effect each of the 3 options. So I will have option 1, 2, 3. And then here C, assuming that any combination of the 3 options is possible, Draft an alternative proposal illustrated with figures which offers the best solution to the current problem. So I leave one column for option. This is option C. Uh, so then now I do one by one. So number one, it says close down taxi service from zone A and E and continue operating in only the remaining 3 zones. So then what is this? Variable operating expenses vary directly with turnover. Okay, specific fixed overheads are directly related to the zone concerned and would be safe if the service in the zone were to close down. Okay, then after that, so this one is specific fixed overhead. Then general fixed overheads are apportioned equally between the 5 zones. General fixed overhead. For every zone closed down, there will be 15% savings in the total general fixed overhead. Okay, general fixed overhead are apportioned equally to the 5 zones. So this is general fixed overhead. The total will be 300 times 5. So the total general fixed overhead is 1,005. Okay. For every zone closed down, there will be 15% savings on the in the total of the general fixed overhead. So that means 15% of that 1,005 lah. Okay. So that means in the case of option 1, so the general fixed overhead would be saved by, because 2 zones closed down, so that means they will save 30% of that, of the total general fixed overhead will be, so that means they will save 1,005 times 30%. So that means the general fixed overhead will be saved by $450,000. 450,000. So 1,005 minus 450, so will be 1,050. So the general fixed overhead for option 1 will be 1,050 because they closed down 2 zones. That's why they save 30% of the total, which is 1,005. Okay. Then specific fixed overhead, they said that specific fixed overhead will be saved if the zone is closed down. So for option 1, the option zone A, zone E closed down. So specific fixed overhead will be 880 plus 630 plus 630 plus 850. It'll be equal to 2360. Okay. So this one specific fixed overhead 2360. Variable operating expenses varies directly with turnover in each zone. So that means the turnover also add lah, B, C, D. Okay. Okay. So at the okay. So B 3,004 plus 1,008 plus 2,006. 7,008. That's how I get 7,008 here. So the variable operating expenses vary directly, which vary directly with turnover in each zone. Okay. So that means so that means this one I actually don't need to care because zone A and zone E closed down. So variable operating expenses also add up the B, C, D. So I add 1,590 plus 620 plus 1,210. So it's 3,420 variable operating expenses. So this is my turnover minus variable operating expenses is my contribution. Okay, contribution minus all my fixed costs. This is my net profit. Actually, this question is easy, right? Okay, then option 2, close down taxi services in zone A and E but retain some of the business in zone A by using taxi from other zone. This would mean turnover will fall to this would mean in zone A turnover will fall to 850. So they say close down zone A and zone E but retain some of the business in zone A by using taxi from other zones. Okay, by using taxis from other zones. So that means actually I will take this, because this is 7,008 is I add A, B, C, B, C, D. So I will take 7,008 plus 850. So there I get 8,650. Variable operating expenses would increase in price by 25%. So in zone A, variable operating expenses will increase by 25%. Okay, so so um, so that means in variable operating expenses will be 1130 times 1.25. Okay, increase, so 141.25. So I can make use of this option 1 figure. So I add 3420. So will be 4832.5. So this is my contribution. Specific fixed overhead will still be the same because option A is actually closed down. So there is no specific fixed overhead for. Then the general fixed overhead will still be the same because they closed down two zone. Okay, so then you see it's stated here the specific fixed overhead for zone A and E would be saved. There will be the anticipated saving in the general fixed overhead. So that means there will be the expected 30% savings in the general fixed overhead. So number 3, maintain taxi in all 5 areas by offering reduced price. This would increase turnover and variable operating expenses by 10%. Okay. Or increase the variable. Okay. However, by reorganizing driver working schedule, an additional 5% savings could be made in variable operating expenses. Okay, so now that means we go one by one first. Okay, so okay, they say maintain taxi services in 5 areas by offering reduced price. This would increase um, turnover and variable expenses by 10%. Okay, so so that means now you go and total up all the turnover. Okay, so I will total up all the turnover. Okay, so the total of all this turnover. Mm-hmm. So the total turnover is 10,700. So increase by 10%, right? So I times 1.1. Okay, so I get 11770. So this is my turnover. Okay, so now they are saying that the variable operating expenses. So that means these are the variable operating expenses. Variable operating expenses were so what is first of all you go and calculate what is the total variable operating expenses. um 1130, then I add 1250. So variable operating expenses is I calculated all my variable operating expenses is 1250. So my variable operating expenses is I calculated is 1250. Okay, so I have calculated my variable operating expenses is 1250. 1250. Okay, so 1250 is my variable operating expenses. They say that this would increase the variable operating expenses by 10%. Okay, so that means how to increase by 10%? That means I times 1.1. Okay, 1.1. Okay, so times 1.1. Okay. So you take the variable operating expenses, it increased by 10%, right? So you times 1.1. And then, but however, by reorganizing the driver schedule, an additional 5% savings would be made in the variable operating expenses. So that means you will take this 1250. No, I mean not 1250. The total variable expenses is 5,008. Sorry, 5,008. Okay, 5,008 you times 1.1. Okay, because the variable operating expenses will increase. So but the thing is there will be 5% of that total increased variable operating expenses when they reorganize. So then after that you times 0.95. So that's how I get 6061. So that means how you get 6061, you take the total variable expenses, which is 5,008 times 1.1 times 0.95, because 5% savings, that will reduce it to 95%, right? So you get 6061. Okay, so then you get contribution. So then now the specific fixed overhead. Okay, the specific fixed overhead actually is will be just add across, because the specific fixed overhead won't be affected, right? So you just add all the specific fixed overhead plus 880 plus 630 plus 850 plus 150. So the specific fixed overhead is 3001, and then the general fixed overhead will be just add across, which is 1005. So you get the net profit. Then here, assuming that any combination of the above option is possible, draft an alternative proposal illustrated with figures, which offer the best solution to the current problem. Okay, so then what is your proposal? Okay, so you see, when they um, run the taxi, and at reduced price, they earn the highest profit. So that means actually it's good to run the taxi at the reduced price. But you see, a zone A, okay, zone A, this is zone E. Zone E is making a negative contribution. So zone E is definitely you won't consider, you won't consider zone E at all. But how about zone A? So you see, zone A, the this is the variable operating expenses. So what is my proposal? An alternative proposal which offers the best solution to the current problem. Um, zone A and zone E, even by offering reduced price, reduced fares, the contribution will still be negative. Okay. So the contribution for, okay, so you see, this is zone A. After minus variable expenses, then you, if you, this one, if you minus specific fixed overhead, it's already negative. So then also you need to minus specific general fixed overhead. So for zone A, it's a totally hopeless case, because it's better to close down the zone. It's making a loss, you see, it's making a loss. So even if you can do your detailed calculation, but even if you make it at a reduced price, okay, let's say turnover increased by 10%, so 1007, I do a quick one. So increase 1870. Okay, so that means it increased by 170, but the loss is 320. So even the turnover increased by 10%, it cannot cover the loss also. So zone A is hopeless. Zone E also hopeless. So even if you increase, reduce the fares, also zone E is a loss-making one. So that means you okay, you see, number one is offer, close down zone A and zone E, but continue operating in the remaining three zones. But option 1 is not as good as option 3. So that means now we are going to combine option 1 and option 3. So that means now I'm going to say that okay, the alternative, the proposal would be to close down zone A and zone E, and to operate taxis in zone B, C, D at reduced price. Okay, so based on that, okay, my turnover would be the three zones, 7,008 times 1.1, so will be 8580. Then my variable operating expenses will be 3420 times 1.1 times 0.95, so will be 3573.9. Okay, so then this is my contribution. Then specific fixed overhead will be the same as the option 1, because option 1 is the addition of all the three zones, and also general fixed overhead. So this is my net profit. Okay, then I put here best option C. Okay, so my answer here is a bit long-winded, but you can just simply say the proposal would be to close down zone A and zone E and operate zone B, C, D at reduced fare. Okay. So then here state two limitation of cost volume profit analysis. Two limitation. Limitation is what you cannot do, okay, out of the cost volume profit analysis. First of all, here I want to explain what is cost. This D has no relation with the other parts of the questions. Okay, cost volume profit analysis graph. So this is a cost volume profit analysis. This is the dollar sign. Okay, and then this is the quantity or volume. So this is 0. Okay, so this is the fixed cost. So that means fixed cost is actually a straight line, straight line. Because fixed cost is fixed, but even though you produce 0, even if when the volume is 0, the fixed cost is fixed. And when the production volume increase, the fixed cost will not increase. Okay, and then this is the total revenue figure. I mean, total revenue will increase in direct proportion um, with volume. Okay, the dollar value for total revenue will increase in direct proportion with volume. And then the variable cost will also increase in direct proportion with volume, but it should be at a slower rate. So if you combine fixed cost and variable cost, this is your total cost, and then this is your break even. So this is a cost volume profit analysis graph. So what are two things that this cost volume profit analysis graph cannot do for you? So what can you think of? Right? So I would say that okay, the cost volume profit analysis, so I can put bracket CVP, assumes that revenue, total revenue increase in direct proportion with production volume, which in reality is not the case, because beyond a certain volume, sales will slow down. Yeah, correct. Because when you produce so much, then the I mean when the product is more available, then you have to reduce the price in order to sell at the great volume. So that means what are the limitation of this? What other limitation that you can think of for cost volume profit analysis graph? So same thing. We are assuming that variable cost changes in direct proportion with volume. So variable cost and also total cost changes in in direct proportion. Okay, not total cost. Here you should change to variable cost. Changes linearly to volume. Changes in direct proportion to volume. Um, but in reality, it's not, because when you buy more, normally the supplier will give you discount. So it does not affect the reality of these economies of scales. Okay, and then another limitation of cost volume profit analysis is this straight lines here actually is it only describe a situation where the factory produce or the company produce one product. Um, but in reality, a company could produce many products, 2, 3, 4 different kinds of products. So this cost volume profit analysis does not take into consideration product mix. Okay, which is usually the case. They are saying that volume increase, then dollar sign increase, cost increase. But volume increase, you must see volume of which product. Some of the volume, if the volume increase for some of the cheap product, then that means now this one you are saying a total volume. So that means you are not taking into consideration the effect of product mix. Okay, if there are 2 or more product consume of but very little variable cost, so you can actually write in your own words okay, so here you can just copy down here, this one, replace it with variable cost. It assumes that total revenue and variable cost changes linearly with volume. Okay, I put it bigger so that you can read properly.